Good morning. I hope you're doing well, and welcome to today's edition of the London session open. In the next 600 seconds, we're going to take a look at the markets and see what's going on. See if we can identify any interesting ideas to trade, and as well, going to see what's happening in general in the markets. Before we start though, it's always need to stress that trading financial markets unfortunately is risky, and there's a general risk that we'll lose all of our invested money. As well, I want to say I'm sorry for being late today. I had some technical issues and that caused a bit of a delay, and then unfortunately as well was a lot of action in the crypto markets that needed to be dealt with. So we're gonna begin with Bitcoin, and Bitcoin just traded below my short-term support level, which was the 87.72 level. As you know, I've been bullish here since pretty much April 24th. The market pulled back, went to our favor, and then moved back down again. And today we're seeing a bit of a sell-off, and it looks to me that we should be careful here. And obviously, if one is long, one would have been stopped out, and there's not too much to do about that. And I think for our bearish position, if we trade below this low of today, I think we will most likely continue to head to the downside. In fact, I think we're gonna head to the downside anyway. A lot of other crypto markets are bearish. To give you an idea, Litecoin just touched its support level. Ripple, which we analyzed in the past, and I shared an update I think 2 days ago, is bearish. I was bearish already from 86.75, and yesterday Yuri posted an update on Ripple as well, and we said take out the low, then this could head to the downside. And then you have other IOTA, which just took out this weekly low. I actually bought some IOTA here already at 125, and I bought it around 125, and then market moved up, and then market moved down, and then market moved up, and then market moved down, and I closed out my position here around $2.06. And there's other stuff as well. You have EOS, which is like the big winner. EOS was heading to the upside, and I said if we take out 1971, we can head to the upside. That never happened. It's still having a bit of a profit taking here. So, and it's not just this. Look at this one. This is NEM as well. Was very straightforward. It's bearish on the downside, bullish on the upside. Turned bearish, and then Monero, I never had a bullish view on it. It's just been trading to the downside. So you're having a lot of these cryptos moving lower, and because of that, if Bitcoin continues to trade to the downside, then that wouldn't surprise me. And what's happening here, what I think is going to happen, is that there we go. I think the market is capped by this level, and we're back now in a sort of sideways type of market, and that this market is probably going to consolidate this high and this low, and then eventually I guess we'll take out maybe the high. So if we take out this level here in Bitcoin, 99.50, I'll resume a bullish bias, and we'll probably target the March high. But for now, it is still, if you were long, you would have been stopped out. And I think if we take out this level, that the market could potentially just trade to the downside. So this is a little opportunity to be bearish. If you're trading the CFD with a broker like Amana Capital, then it's very straightforward. Just press on sell. And risk reward ratio here is not necessarily optimal. I think maybe $780 if one would work with levels just above dollars, go down about $874 return. And obviously if we plummet all the way down to the low, then you're looking at on the lows here, and this is a log chart, that's why it looks the way it does. You know, we could easily maybe go down to, well, not easy, can't never really say easily, but maybe 3,500. But again, I don't really think that's gonna happen just yet. I think we're probably just gonna consolidate, and we'll consolidate here for a month or so, and then we'll check out the high. What is really interesting as well, don't want to promote myself too much, but obviously I turned bullish down here, and I made some good returns on the way to the upside. Then I got involved here again, and now I'm being stopped out for on the crypto portfolio about a 6% loss across all my cryptos. But what's interesting here is as well that popular in the last month or two, sorry, last year at most, in essence proclaimed that when we were trading up here that the market had bottomed out, and you need to be careful just in general following people on Twitter. But I see it more of a situation of the average trader, or sort of the average investor. You know, when they proclaim victory, it's usually time to get worried. Same time, if you read about something on the headline, say of some tabloid or some other markets, then you know, other similar newspapers, is also a warning sign. For example, like in Sweden, so I was born in Sweden, so I read Swedish press, and some of the sort of news tabloid pages, like when the Bitcoin was at the lows, they were like, oh, the 10 reasons why Bitcoin will continue to decline. So that's a contrarian indicator there. Alright, so this is the euro, and the euro and the dollar in general is doing quite good, is stabilizing, which I think would make perfect sense. Now technically the trend is still bearish below 119.82, which is this level up here from the 6th of May, so that should be last week's, that should be Sunday's open, or Sunday's high, more or less. This is Monday's high, actually. This is lowered. So the dollar index, had an amazing run. So you see, it was consolidating for a long time. Then you had that breakout. Similar things probably going to happen with cryptos. They consolidate for some time, and then you have a nice breakout. So when you have a breakout like this, just gone strong, and this is the daily chart. And the market, I think it would have been better for the dollar if it would have gone up a little bit, just halfway, and then move back down, because that would have helped it to build a nice base to the upside and a nice following. What happened here at the end is that it went up and up and up, and then I think pretty much from say 91.80 or something like that, a lot of people just got panicked, and they're like, oh, everybody's buying the dollar and I'm short dollars, let's flip positions, and then they just push it up. So I think this move here is a little bit extended, and there's a general risk now that we start to have some sort of correction. Because if you look at this from a daily perspective, I mean, you are at the highs. We don't buy at highs. In fact, people sold here at 94.22, and they sold here at 95.17, and then they sold 1, 2, 3, 4 times. So this is a lot of resistance that it needs to take out. Now, if we take out the May low at 92.34, I think this could accelerate to the downside. And if we just use a simple Fibonacci or something like that, you get these 3 levels. But I think, I mean, if we look at this low here, you have the breakout level. I would argue that at least a 50% correction of the gains from the March 17th low. So this is actually, March 17th. So that sort of tells me a bit that maybe we're starting to see a low in the pound, a low in the Aussie dollar, low in New Zealand dollar, and pretty much the dollar pairs in general. So we need to be careful. Another sign as well of the market peaking is this candle here, up and then peak and then bearish. Now, a trend will usually continue to surprise you more than the other way around. So we're trading really close, or not really close, but relatively close to the May 4th low, And if we take out that, then yes, I think the dollar is probably going to go down, and if possible I want to buy it down here. And that means that for the euro, most likely we take out 1982, and if we take that level out, probably we'll go up to maybe 2090, maybe 2150, and then we just need to see what happens from there. But right now we see the warning signs. We're looking at the charts here. The trend is still bearish, so I want to continue to be bearish, but bear in mind, if we trade above 119.82, then this could potentially have bottomed out. But for now, most likely trade between this high and this low for a few more days, maybe even lower, and that's it. Crude oil is doing good. It's holding up relatively well. Now I bought down here, booked profits yesterday around the highs before the collapse, and I think if we took out the high, I think this is probably going to encourage people to trade to the upside. It is a bit extended though. It's not necessarily something I want to jump on and trade right now. But again, I think if we took out the high, we could probably hit to 73.25, which is the November 14th low from 2014. The alternative in my preferred scenario is actually that the market goes down maybe to 70.28, 60.50, and then I will look to buy down here. I prefer that with stops at 68.10 rather than buying up here. Here's gold, and gold is moving to the upside. This is another sign about the dollar, and the dollar actually starting to give up some gains. And we took out this May high, and I said on a break to the May high, this market could head to the April 24th high. And this would also, the break to this May high would tell us that we ended this downtrend. So we were in a downtrend. The market was creating lower and lower highs like that, and we just took out that high in the last 24 hours. So probably pushed to the upside. Now there are some challenges with these sort of markets, and the biggest challenge is that it's trading sideways in the big picture, which means that we can't necessarily trust all the levels. So sort of the safest levels are 1,301. This is like the big level, and the market will overall most likely drift to the upside as long as trade above that. But it's not feasible, because if you would have bought at the May high, stop here, that's $18 risk versus a potential reward of 13. So it's only if the market goes all the way up and makes $32 that it would make sense to buy. So from that perspective, I'm not like a big fan. You can potentially work with 1,310. That would have, give you a risk of $9.50 to potentially make 13, and that could be better. And I think for now it's just trading to the upside, trying to take out the high from yesterday's high, and I think it's gonna push to the upside. Now here's the DAX. The DAX is taking it easy. If you've been trading the S&P or the S&P, FTSE, or other markets like that, they've been gaining. Actually, this one has been gaining as well, but in particular the last days is the actual. Let me see here. The U.S. stock markets that have been gaining. So if we take out this level, if we push back to 12,868, I think traders are probably going to be buying here with stops at 12,699. So probably down and up. That's what I would guess. And that's it. Those are the main markets that we cover here at the morning update. Good morning, hi. Thanks so much for joining us. Today is Canadian non-farm payrolls at 1:30 p.m. London time. We're gonna provide a live coverage of that here in this channel. So if you come back at 1:15 p.m. London time, we will. You can join. It's for free to join. We're gonna look at Canadian dollar pairs, see if there are any interesting trading ideas to trade the news. The market anticipates that the Canadian economy created 17.4 thousand new jobs, and I a beat of that obviously boosts the Canadian dollar a bit, and as well, they anticipate the unemployment rate to be at 5.8. And if the numbers are lower than that, it will boost the Canadian dollars, and if they're slightly higher than that, then they would weaken the Canadian dollar. In general, the Canadian economy has been improving. The unemployment rate in the beginning of 2017 was at 6.8. Now it's at 5.8. But in December, the unemployment rate was at 7.3. So we've seen some solid, small improvements, but very good improvements in the Canadian economy. And if you think about it, with crude oil being very strong, most likely that particular sector is probably going to see even better growth. And the Canadian economy should most likely produce more jobs, and if not less jobs, in the next few months. Okay, so I don't have any questions. Thank you so much for joining me. Hi, thanks so much for joining me in the chat box and everybody else that is watching. Don't forget to come back here at 1:15 p.m. London time. As well, if you like the video, just click on it and hit that like button, please. Alright, thanks so much for watching, and I'll see you guys in a few hours. If not, I'll see you guys most likely on Monday. I can't guarantee I'm going to be here on Monday because I'm officially off, but I might still be here at 9 a.m. just to do the morning update, but I can't guarantee that right now. I think the best thing is just keep track of my Twitter, and if I go live, I'll send you a message about it. If you want to follow me on Twitter, here's actually, I can't post the handle, but it's AlexFX00. Have a good day, and happy trading.